Hey traders, Raghee here. Welcome to Charts and Coffee. Happy Friday, everybody. Had some camera difficulties this morning, but I think we're all good to go. Thanks for hanging in there. Sorry for my tardiness, but great to see you all. Hope you've been sipping some coffee in the meanwhile as we await what is going to be a really, really interesting session. So if you've been following the free videos and if you're in the Sector Secrets room or the futures room, and you've been following the premium videos as well, we've been talking about the uptrend in the S&P and the NASDAQ. We've dug into the guts of those indices, looked at the stocks, looked at the sectors and said, look, the path of least resistance remains higher. But now things actually get interesting. And so today and going into Monday and all the way to next Wednesday, where we have an FOMC statement, these next four sessions, so today, Fridays, Monday, Tuesday, and Wednesday session is going to be really important in terms of, clearly we've punched through the new high, right? I never assume that new highs are just an easy battle and the bulls are going to be victorious and we're just going to keep moving higher. I never assume that. I want to assume that we'll see a slight pullback, okay? And if we do, great. The opportunity will be in the pullback. In the meanwhile, those of you in the mastery know we're still long XLV. We're still long XLC. What we took are the relative outperforming sectors within those specific two broader averages, and we put the long positions there. So with that being said, those are the positions in the equity markets that I'm carrying into today's session where, we're flirting with some historical levels once again. I also have a longer term long position in gold where we're looking at the way in which GC is interacting with 1800, slicing and dicing, still making its mind up, not really doing anything more than giving us opportunities to build our long position. If we're wrong, we got a pretty tight stop, short leash on this trade, but it's really built on a trade that we have now been in for the better part of, I guess a month now. And that is the long bond position. And this long bond position, which really kind of started around the 159 level and then 161 again. And then most recently at 163, these have been stair stepping up with bonds. Am I looking forward to a pullback? I am, for the main reason that we will, as we have 3 times earlier, we will continue to buy that move. The long bond position should feed my gold position. And in an upcoming episode or issue of Countdown Trader over at countdowntrader.com, right now, Trish is working on that question. She's always looking at the questions and the feedback we get in the rooms here in Charts and Coffee. And she said, I think you need to dive into that real yield conversation about the connectivity between bonds and gold. And occasionally when the dollar comes into take over for a little while, and what's that relationship between those three markets. So that's where we sit this morning. I'm very excited for the session, and I'm very interested in knowing how we're going to see everything wrap up. I'll be with you all in the futures and the options room at 3 p.m. We'll take a look at what's transpired through the trading session, see what the closing sentiment is. So I'll see you in those 2 rooms at 3 Eastern. In the meanwhile, let's jump into the questions. Line Watcher, hey, good morning. RH, I know you don't like buying at the highs. Not only do I not like, I'm not allowed, right? I'm not allowed. My process as a trend follower, buyer of the dip, I'm not even allowed, right? But with the NASDAQ so strong right now, would you buy yesterday's close if we see a gap fade this morning? So Line Watcher, a couple sessions ago, I said if the markets take off from that Monday sell-off, or the markets take off from a sell-off on the NASDAQ, I will be long as a day trader. We took a day trading long this week. It was a fantastic monster day trade. However, until the market pulls back to, I'm really looking at a volume ledge. Let's go over to the NASDAQ here. I'm looking at a volume ledge. There's 2 places that I can position potentially along, and it will need a pullback. And by the way, now that we're at all-time highs, keeping in mind that all-time highs are very seldom just crushed and the market keeps going higher, there's usually a rejection at that resistance. the first go round, I'm looking for the opportunity of some weakness here. And I'm not talking about a big sell-off in any way, but I am talking about a move that could take us to possibly this area here, VWAPs and volume, right? And or this area here. That's what I'm looking for. If we get that kind of opportunity, I will once again engage the daily to the long side, probably via maybe QQQ, but it could be XLK or XLC instead. So that's what I'm looking for. I need a pullback, and I will continue to consider these pullbacks because the overall structure is double green. So pullbacks have been working in the double green. This is the last one right in there. Right. So I'd like to see something like that happen either aggressively in here or more conservatively in there. So yes, now it makes so much sense to consider some weakness, some fatigue, and then a retracement of this really this 4-session, maybe 5-session surge to, well, new all-time highs again. So no, I'll buy a gap fade as a day trader, right? I'll buy a gap fade on the 5-minute time frame with the goal of being flat by the end of the day, and I'll take the move today. But that daily time frame entry is going to be a completely different one. When you are able, and you bring up a great question, Line Watcher, when you are able to manage multiple time frames, therefore multiple time horizons, my XLV and XLC hopefully will be an open trade for more weeks to come. We've been open in that trade now since Monday. So hopefully another, many weeks to come. We'll see. A few days to a few weeks is sort of my time horizon on a daily. But when you don't get the opportunity on the daily, being able to shift gears and go to a shorter term 5-minute time frame and just be a day trader and say, look, there might be some interesting buying opportunities. Let me use a shorter time frame, shorter time horizon, and take advantage of the move. That's what I love about, at this point in my career, 30 plus years in the morning, I know I'm going to take advantage of pullbacks like that short term. And then end of day, I'm focusing on the second half of the day, looking for those setups that will take me to from a few days to a few weeks. So you sort of balance out your life by not just being a day trader and not just being a swing trader, but by understanding the power of both. So I hope that makes sense and you have a wonderful weekend as well. Thanks so much. Great question. And I know we just had the day trading class. And by the way, on August 2, we're going to be talking about some swing trading in a webinar that first Monday of August. So really looking forward to that. Okay, next up is, hey there, Dan, how do I differentiate between being long in an exhaustion trade versus being short in a downtrending trade? Don't many indicators look the same? So Dan, I'll tell you what, I can't account, and thank you for the question. Terrific question. You guys are bringing it this morning. I like it. Maybe I should be a little bit later more often. Just kidding. No, that's a great question. So what we have is, what indicators are you looking at? So first of all, let's look at the entire universe of indicators. I'm never going to say this one's better than another or this indicator's that's ridiculous, right? What I do want to say is the indicator that I'm going to use, is it answering the question or is it solving the challenge, the problem that I have? For me, the early problem I had, challenge, the question that I had was being a devotee of Dow theory, believing in the fact that the market has 4 different behaviors, trends, cycles. I needed to decode that. That's where the grab candles came from. That's where the adherence to the 34 exponential on the high, close, and low came from. That's where then subsequently the wave and the grab worked together to answer that question for me. And then more recently, the JT multi, decoded that, simplified that to an even greater degree. These are color coded for a very simple reason. I know that in the market's not my enemy. That's about the worst attitude you can take. The market could care less about me. I am my own enemy. I will always be my own enemy in the markets. So how can I communicate with that basic part of my brain that will tell me to, be bullish, be neutral, be bearish? So I thought, well, colors work. Colors, traffic lights work. How can I take that adherence to just green is bullish, yellow is neutral, or blue in the case of my grab candles, and red is bearish, and stick to that sort of self-created traffic light. So my indicators rely on moving averages. I realize there's a flaw. They're incomplete when you only rely on price. Realize that most traders, it's the first and the only thing they do, price-based indicators. So what did Dow talk about after market trends? The 6 tenets of Dow. The other tenet, or one of the 6, is volume. And volume, if you watch my video from the breakout yesterday, Wednesday, day before yesterday, Wednesday, I said, look, we had a low volume breakout of the sell-off high from Monday. Scene of the sell-off, we returned, it was a tie ball game, but that move happened on kind of low-ish 70 to 80% volume. Dow, and I was just talking to my husband about that this morning. I'd say pre 1989, 1995, that area, before the retail trader was really empowered in the markets to direct their own order flow, commissions came way down. I mean, late 80s to early 90s were very key to us as retail traders. And so I think before that time, volume in terms of low volume breakouts versus high volume breakouts, it was a completely different psychology because institutions controlled everything, right? The institutions knew if it's not us, well, who is it? One of the 6 or 7 other big banks, big institutions doing something. Now we have a retail army. It's a very different environment since 95, where the retail trader has been empowered with transparency, directing their own order flow, and much better order execution. And now as that retail trading army grows, low volume breakouts mean something completely different. And so the indicators that we look at should be really at least one of 4. Volume, volatility are oftentimes ignored, of course, price and time. So no, I don't believe they look the same, but I guess it depends on what you're looking at. So my way of tackling that and answering that, Dan Johnson, Dan, in that very wordy explanation is focus on the type of indicators that you have. Are they all price-based? Because then you're right. They're all pretty much crunching open, high, low, close. So you have a great point, Dan, in terms of, yeah, they all kind of looking the same. They can be. The other thing you want to separate, this is so important, gang. Dan's question is so important because most traders are just confusing trending indicators from oscillating indicators. If you're looking at an oscillating indicator, apply it to the Dow. Apply it to the Russell right now because they're choppy. Don't apply oscillators to trends because oscillators are going to feel that every new high is overbought and every new low is oversold. It's the wrong tool, right? It's the wrong tool for trending markets. So, one, acknowledge whether or not all your tools are price-based, and then realize that you're pretty much just crunching open, high, low, close with some sort of arithmetic formula. And then divide your trending indicators from your oscillating. So what you might say, Rog, what does that mean? Divide your slow stochastic oscillating type indicators away from, say, your moving average type indicators. They're measuring 2 different things in 2 different ways. So I hope that helps. And so in terms of being long in an exhaustion move, that was what Monday was in the NAS. Overall uptrend, right? Green grab candles, green JT multi, and a pullback. See, pullbacks, by the pullback, has become such an odd battle cry because the thing that is required to buy the dip, buy the bleeping dip, right? The thing that's required, the prerequisite, is that we are in a trend. Otherwise, that's not really a valid dip. So AVGO, Ollie, AVGO is not a trend. AVGO is not something that I will necessarily prioritize because trending markets are going to be higher probability markets. Like, for example, you might say, well, it does look like AVGO is sort of moving higher. I agree. However, look at the volatility with which it does. So if you're willing to buy a dip, which I don't believe is valid, but if you're willing to buy a move lower, you've got to really buckle your seatbelt. And I'd rather not be in as unstructured a general move higher as something like this is. But being that it's AVGO, there's no reason that you can't look at the other stocks that are sort of in the same group as AVGO and say, look, am I looking at semiconductors? What other stocks is AVGO hanging out with? And can I find a better relative outperformer in that group? So AVGO might pique your interest and it might make you research a little bit more. And then AVGO could open the door to other names that are going to be relative outperformers. And that's the way that I like to do it. I don't mind a single stock, and I'll research that one and say, gosh, thanks for introducing me to your friends, but I really can't trade you yet. So don't fall in love with the actual symbol, but fall in love with the idea of perhaps the symbol giving you more opportunity by introducing you to other stocks in that same group. That's that boats and tide analogy that I talk about so much. So thank you for that question. JMO asks, good morning. Good morning, JMO. I know it's close to earnings for you, but what are your thoughts on TMUS? I have liked TMUS for some time. I have. This is on and off, been on the watch list. I was looking for this inside that 6-week window and looking for moves like this, which didn't quite get to the wave, which is usually what I like. I could definitely say that was a miss, right? This is a 21 EMA entry. This was a 34 EMA on the high. So there have been opportunities. I just haven't been aggressive enough to grab them. However, as we get closer and closer to earnings, as you said, inside 2 weeks, I'm really just going to, for the most part, shut it down. So no, I will not buy this pullback. It's tempting. It's the only thing I could do. We're at a point of control, which is really, really nice. We're blue grab candles, support at the 55 EMA, have some interesting Darvis support here. The only thing you can do is be long. And then I will say, you really want to be out by the time earnings do come out. But probably not my cup of tea, as you said, because we've got, I think that directional debits 6 to 2 weeks out from the earnings release, you're not dealing with the IV crush. Now, inside 2 weeks and really inside 1 week now, your implied volatility is definitely elevated. So I think people who collect credit in this window have an edge over people who like to focus on the debit, on the directional. So I will acknowledge that this is not my play, right? This is not my power band. And I'll leave it to folks who love collecting credit. But you can there's still an opportunity here. It's definitely one that prioritizes bullishness. And even if you were to buy this pullback, I would still say be flat before earnings release. So maybe a quick swing play, right? That's what you now have this very truncated time frame though, 7 days, right? So be careful and cautious of that. But that is pretty much what I'm looking at there. So thank you very much. All right, next up is, let's see, some the secret squiggles. Gypsy Jones, I'll tell you what. So those of you that don't know my little joke, I've created most of my indicators. Most of the indicators that you see on the screen, I didn't create exponential moving averages, but I went ahead and said, hey, what if I plot a 34 EMA on the high, close, and low for zones of support and resistance on a single level? I think a lot of traders think trading happens at a single level, when in fact, especially when you start looking at volume, you'll see there's areas, there's zones. So 34 EMA wave grab candles, the V-score, all this stuff, the HPMRs, if you see my volatility tool, most of these I've created. The hazard in that is that sometimes you can fall in love with your stuff because, well, you created it. They're your kids, sort of, right? And so I made sure I balance out that bias of loving my tools by also giving them a silly little name, which is the secret squiggle, right? At the end of the day, there are certain times where the indicators are fantastic. There are certain times, like this coming Wednesday, where the indicators, the secret squiggles, won't mean a darn thing because the Federal Reserve is going to be the dominant influencer of buying and selling and volatility and volume, more so than any of the secret squiggles. So I try to make fun of my indicators. So I keep sort of a level head about falling in love with what they're saying and making sure that I realize that after today's session, starting on Monday, is the Federal Reserve's market. It always sort of is, but when we have proximity to the statement and decisions on rates and the press conferences and such, it is their market. And my secret squiggles, as much as I love them, they're going to fall a distant second to the psychology of the central bank and what they're going to communicate about the current economic environment, which then leads us to understanding what it is that the policy might do to stocks, to commodities, to interest rates, etc. So I hope that makes sense. Am I still long gold? I am. I absolutely am. All right. So Gang, again, thanks for hanging out with me for Charts and Coffee. We had some weird power outages yesterday. I don't know why my camera wasn't working, but thanks so much for sticking with us. Thanks for being here. I will see you all on Monday here in Charts and Coffee, and I will see you all in the closing session in both the futures and the options room, and I'll dive into a whole lot more of this. You can take a trial to either one of the services. Heck, and join me today, this afternoon, if you'd like. And in the meanwhile, be good to each other, gang. Have a great weekend, and I will see you soon.